Another highly requested stock on the channel is actually Altria. Many people are asking me my opinion about this stock, as many of you, my viewers, actually are like me and kind of like opportunities where, maybe something is trading close to 52-week low, or there's some type of story that, of like a bad sentiment around something. And whenever you have bad sentiment, you normally have much more value, as people don't really want to touch a specific stock for a certain reason. But then with time, the sentiment change, and this causes the valuation to reprice much higher, giving you first a massive margin of safety, and second, giving you much higher returns than if you really buy something popular, like maybe now a commodity stock, which is pretty popular. But you have always those type of assets that nobody wants to touch, and this is normally where the value is. But those assets, they can be kind of a value trap sometimes, where you feel it's cheap, but maybe it's not cheap enough to compensate for the risk. So this is why I'm going to talk about Altria stock, do a quick overview on it, and give you my opinion to see if it's a buy right now, or if it's maybe a value trap at those prices, despite it falling so much from over $56 to $43 in like a month and a half or 2 months, which is a crazy move for a company like Altria. And if you look at the past 5 years, the company has pretty much gone nowhere. So it could actually be a great opportunity. Now, looking first at the valuation and mainly at the dividend yield, because those companies are not really growing too much. The main ways they return value to you as a shareholder is first with a dividend, second with buyback, and maybe some type of revenue growth. But the dividend yield is around 8.5% right now. As you could see on this chart, is one of the highest it's ever been in the history of the company, at least over the past 10 years, which is the data that I have. The highest time that was higher than now was actually only in March 2020, where the stock hit a 10.5% dividend yield. But now at 8.5%, it's a pretty amazing dividend. And looking just at a PE ratio, it's also one of the lowest times it's ever been over the past 10 years for the company. Now, the company really needs no introduction, as many of you are familiar with it. But if you're not familiar with it, I'm sure you're familiar with the Marlboro cigarettes and stuff, which is maybe one of the most popular ones in the world. They have over a 42% market share in the United States in terms of a smokable product. It's a pretty amazing product that have given this company, a lot of cash flow for many, many, many years. It continues being a cash flow machine with very high margins, over a 40% net income margin. I mean, even tech companies and Apple cannot get the margins that Altria and other kind of tobacco stocks really get. Okay, but the company is trying to diversify from this industry, as people don't really like smoking anymore. Some of the governments are trying to crack down on menthol and other type of smoking. So now you have alternative smoking, right? You have vapes, you have many things that young people normally like. So Altria, a couple years ago, they wanted to grab a share of this industry. So as you know, they bought a pretty big stake in Juul. I'm sure you heard of Juul because it's a pretty popular type of alternative smoking for young people. It's maybe one of the most popular ones, and many people really like that stuff. So they invested $13 billion in the company, I believe in 2019, if I'm not mistaken. So they own 35% of the company, and Juul was growing amazingly fast. But what happened is, recently the government, they moved to ban e-cigarettes. And when they moved to ban e-cigarettes, their value has gone up in smokes. This is one of the reasons why the company has been down so much, especially over the past year with the whole thing around Juul, because they paid $13 billion for Juul. From $13 billion, now their stake is only worth $450 million. Only $450 million, and basically all the $13 billion were practically gone. Now, yes, the government want to ban e-cigarettes, and they halted, I believe, Juul selling its product. But actually now Altria is appealing in the courts, so they may actually get a decision to keep Juul in the market. So it's a pretty unknown topic right now, but the risk is very, very high, because if Juul really is completely banned and Altria cannot sell any of the Juul stuff, then it basically wasted $13 billion. And if actually Juul can sell some of this product, it still wasted a lot of money because it really overpaid for the company whenever we had a lot of hype around this industry. And they overpaid in general. So it was, one of their mistakes. And this is the main reason, why the stock was down so much. They own a $450 million stake in Juul. They own a small stake in Kronos. And ABI is actually one of their biggest stake. Ambev, and it's around 11.7 billion. And this one is liquid, so they can really sell it anytime they want. But this is the story with Juul, and this is what's causing a lot of fear around the company Altria. But Altria is still a cash flowing machine, as I'm going to show you. But yes, it's a cash flowing machine and everything. But the main risk with those tobacco companies is most of them have a lot of debt. So Altria, they have some cash around, 2.5 billion. And if you count the 12.5 billion from their investment, so they have liquid, you could say around, 14 to 15 billion. So if you take 15 billion in liquids, they have around, 25 billion in long-term debt. So they have a net debt of around 10 billion. Now, for the kind of free cash flow that this company actually gets and net income, this is really not bad. But again, 25 billion is a lot of debt. But again, it's not bad for the company Altria, mainly because it's a free cash flow machine. Now, the main way, as I said, the company returns value to shareholders is with dividends, and it's also with share buybacks. This is the main way you get your returns. So for Altria, I'm going to use a different method to analyze it than my regular valuation model. But as you can see, the company has a guidance of between 4.79 to 4.93 of EPS. Now, if we take the mid of the range and we look at their current dividend yield, which is 8.5%, which is, $3.60. So $3.60, and you get, their lower end, which is $4.79. So the dividend is actually pretty well covered. And it expects a growth rate between 4 to 7% for their adjusted EPS. So as long as they grow the dividend less than that, the dividend is not going to be cut, and they are likely to keep paying the dividend in the future. So I'm not really worried about the dividend with Altria. So now we know the 8 to 8.5%, this is a return you're going to get every single year, no matter what, especially if you buy right now and you lock in your share price. But let's look at the valuation model to actually determine what kind of revenue growth Altria have and what kind of valuation could it actually command. So for their revenues, they made around 21 billion right now. They normally grow revenue between 2 to 4%. So they can actually grow 4%, but I put in 2%, because, smoking cigarettes are declining and many other things. And Juul was actually fueling most of their revenue growth. Now, if Juul actually won't be available and they just, ban this thing, they can only going to grow 2%. But if Juul is here, they can actually hit 4%. But for this video, I used only 2%, which is around 23.3 billion in 2026. If you take the net income margin, which is 41%, I mean, even tech companies and SaaS companies, none of them get 41%. And Altria has just amazing margins, which is over $9.5 billion in net income. This is only a $79 billion market cap, and it's going to make around $9.5 billion of net income. Now, if the whole sentiment around, tobacco stocks and cigarettes and all that kind of stuff change, the PE ratio could be much higher. But I don't know about you, but I don't really believe the sentiment is ever really going to change, mainly around this whole thing. Maybe in the investment, maybe people want to buy those things again, hedge funds and stuff. But many people don't do it for moral hazard. And I actually don't think this is going to stop anytime soon. So I used an average PE ratio of 10. Now, Altria traded between, 12 to 14. But I believe 10 is pretty fair and is a pretty conservative number for Altria 5 years from now. Now, the upside here would only be 21%, which is very, very low, or around 4% every single year. But if you take the 21% and the dividend yield every year is now around 8.2%. So you take the 8.2% and we time it by 5, this is a 41%. and we add 21, this is 62%. And if they can actually repurchase 3% of the company every single year for the next 5 years, which they've been doing, they were purchasing 2 to 3% of the company. 3 times 5 is 15, so we can also add 15 to it. The total return you could get if you buy Altria right now, including revenue growth, including buybacks, including dividends, is around 77% for the next 5 years. So for me, honestly, I believe Altria is not a buy right now, unless you are really familiar with options and you could actually maybe, sell covered calls on it and stuff. You could maybe get close to 100% over the next 5 years. But my favorite tobacco stock actually is British American Tobacco. I think British American Tobacco is growing faster than Altria. It has a much better geographical expansions. They have all around the world. Maybe in the United States people don't like smoking, but maybe in in Europe or in Asia or any place around the world, maybe the sentiment is a little bit better around those things. And some of those countries, their consumption in cigarettes is actually increasing, not decreasing. And also British American Tobacco has many other alternative smoking, which are number two leaders in market share in many countries around the world. And I really like the diversification that British American Tobacco has, which is why I believe Altria stock is honestly not a good buy right now, despite the stock being down so much. Again, unless, Juul gets, the waiver from the court and the stock can go up, but I'm not really betting on that. I'm betting on Juul being banned. So if Juul got banned, you could get maybe 77% over the next 5 years. But if actually Juul didn't get banned, maybe that would jump to 85 to 90%. So again, Altria could be a buy if you really just want a dividend and maybe sell some covered calls. But for me, I want to at least kind of double my money over the next 5 years. And my favorite one is British American Tobacco, which is why I don't really own Altria. So this is my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.